You can also ask yourself a couple of questions, and those are the questions that we're going to be asking ourselves this morning. And we get into a wealth conversation, and I know you guys are going to like this one. And our very special friends from Standard Chartered are here this morning. Paul Njoki is the head of Affluent Banking and Wealth Management Products, Kenya and East Africa. And he's here with us with Ouma Orero, who is the head of Wealth Products, Kenya and East Africa. Gentlemen, good morning to you both.
Good morning.
Good morning to you.
Good morning, Dennis. Karibu, karibu.
Morning. Yes.
Good to have you here. And we're looking at this thing that we all love, but we don't often know how to get there. And so that's the conversation that we will have this morning, and we're glad that you're both in the hot seats this morning. Yes. Before we get into it, of course, you know that we've got to take a trip around the African continent. Dennis is going to tell you what country we've landed in today, and he's going to share today's proverb. And I think you might like this one. But then we'd love to get your interpretation of it. Yes?
Okay.
All right.
Yeah, so... It is the best student is in the room, eh?
Yes.
Yeah, and today we're in Tunisia. Whose capital is Tunis. We're talking about a population of around 12 million people. And Tunisia is well known for its couscous cuisine, So next time you're in Tunisia, just try and enjoy that, as well as their souks, which is their markets, where you can go enjoy their fabric, their handmade garments and whatnot, which gets to stand out in terms of what makes Tunisia what it is and what we know it for, as well as you can just cross the borders and get to Italy because they share the Mediterranean, yeah? So next time you're there, try enjoy that. But our proverb today, a lazy one who sleeps well pays the price. A lazy one who sleeps well pays the price. Orero, what do you make of that?
That tells me, I would interpret it as to get opportunity, you need to be awake. Yes, you need to be awake.
Paul?
I think for me, it's the early bird gets the big worm.
Proverb for a proverb.
Indeed.
Yeah.
Quite simply so. And even as we've had wealth management conversations before, we've had wealth growing conversations before, and something, in my opinion, that we cannot stop having in terms of how we actually manage that. So even as we get into this conversation this morning about some of the things where we say now is your time for wealth, we're going to start off with the very first question as we get into this, gentlemen. Why are we saying that now is your time for wealth?
Good, and good morning, our listeners. So now is the time for wealth, and as a bank, Standard Chartered Bank, we have now, after having looked at the various demographics, what's happening across different jurisdictions, really made a very conscious decision to take a stand and put a lot of investments in helping our clients and basically the general public grow their wealth, secure it, and then obviously transfer it to the next generation. The bank is investing over $1.5 billion in the next 5 years globally to grow the wealth business and put its position as a lead wealth manager for clients, for affluent clients globally. And this is after realization that we serve communities over generations, 170 years of existence, that's globally, 110 in Kenya, and having done the wealth business, particularly in Kenya, for over 20 years now, we can put our hand to our chest and say, now is the time for wealth, and with Standard Chartered Bank. Yeah.
So when we talk about wealth and now is the right time for it, there is need to have a comprehensive approach towards this, because then again, we need to have all these goals, aspirations, but there is need to have a partner who comprehensively looks at your idea and ensures that you are there. So can we share some of these comprehensive approaches that I need my wealth is now, Yeah.
Yes. Thanks. From a Standard perspective, when we look at wealth, we look at it over a given period of time. And when you look at yourself as an individual, you got your needs for now, and you got your needs that the dreams that you want to take care of in 5-10 years. And then at the end of the day, you need to be able to be in a position to transfer that. We got a wealth advisory framework that we use and share with our clients that that helps guide the decisions that you make as an individual around your wealth. Because we know at different stages of your life journey, you got your needs that you want to solve for now. You need some regular income apart from what you're earning in your daily role where you're getting a salary. You need to be able to pay for your short-term insurance, those kind of things. So you got products that be able to solve for that. That's the first piece, and you look at yourself from that perspective. The second piece is how about your dreams. 10, 15 years, what are you looking for? You got that 2 children that you want to take to school. What are those solutions that you need to put in place now that helps to manage and solve that for you? You want to retire with dignity. What are those solutions that will help you be able to retire with dignity? And the last bit, after all this is done, you want to be able to transfer that wealth that you build over a given period. So when it comes to wealth, what we discuss with our clients is that use a partner that looks at you beyond the transactional value, that will be able to discuss with you the solutions that you need over a given period of time. And we got that capability and experience, as Paul has said. You've been around over 170 years in some of the markets, and with that we've been able to build trust and be able to understand what the client sees. So that piece is what we're talking to clients about. Look at your today, look at your tomorrow, and look at your forever needs, and with that build a discipline around it, and you will be able to generate and grow your wealth over a given period.
So I mean, we talk about these things, but we've kind of shared a few nuggets of those with each other over time, Paul. And if we're saying, look at today, tomorrow, forever, but then folks, sometimes we want to know, what exactly do we do? We know what the approaches are, but what do you do? That you're looking at this money in your account, maybe at Standard Chartered, and you're saying, by all definitions, it is not wealth. Okay? What are we doing that is actually going to take it to move it from just money in an account to what then would be considered wealth that we can manage in the future?
Yeah, thank you. So everything that our clients, ourselves, we do is geared towards achieving a life goal. Everyone has a life goal. And what we found based on the research we've done a lot of research over a number of years, is that money in itself is not the end. It is a means to something. Okay, and we find these life goals tends to come to a number of things. They could be more, but a number of things come out. Firstly, everybody is caring about their financial well-being from a health perspective. They want their family to be healthy. Okay. The second thing, and from COVID time, that became quite elevated. The second one, children education. It is unnegotiable. People are keen about retirement and retiring in dignity. All right, and sustaining their lifestyle that they had acquired during their work years or their active years through into retirement. Nobody wants to work hard and then at retirement it's all desperate, right? And then the issue of legacy planning in terms of how do this wealth translate to the next generation is becoming very topical. And we have some statistic: $125 trillion globally will transfer in the next 25 years. We are experiencing one of the most significant wealth transfer that no other generation has seen.
And this is transfer from you to your children, to the next generation.
Absolutely. Okay. I mean, the baby boomers made a lot of money, because they're the guys who made money after the wars, right?
Right. Yeah.
And the economic prosperity that has happened across, right? Of course, like in Africa, most countries got independence and people created business and careers and all that. Now those people are having to transfer their wealth to the next generation. And are we ready now then to do that? Then therefore, we come to Standard Chartered and we say, how does the today, tomorrow, forever framework that Orero has mentioned really interprets to these individual client so that we achieve those life goals, right? And therefore, then we get into the planning. We get into the planning, and we know very well, and this is common knowledge, that failure to plan is planning to fail, right? So the question around planning about our finances and how those finances meet an actual life goal is very important. And that's what we are coming to say, that now is your time. Now we cannot procrastinate. We have to be very deliberate and start putting a plan in place based on the client goal so that we can achieve this. Now, I'll tell you then, how do we do this?
Right.
Our relationship model, our relationship manager model is the best way of having that conversation started, because a relationship manager sits, and we have trained them very, very well. We do a lot of training, including training with the INSEAD, a global university, to be able to sit with the client and understand, listen to the story the client is talking about, and understand, then interpret those stories into the goals, the life goals, and then agree, okay, I see, client, you're talking about your children, how many years? Okay, 10 years, I'm hearing that. I'm hearing you're talking about your emergency health kitty somewhere, okay. How much does that look like? Okay. I'm hearing that you're talking to retire in the next 10 years, okay. Now, those goals together are requiring you to have this form of, this is the obligation. Therefore, then let's go to our framework. How much do we need to set aside for today? How much do we need to set for tomorrow? Which investment are we going to go? Do we need insurance to secure some of this? And then, if there's some of the legacy goals, then we say, what structure do we need to use?
It's interesting that you say it. I mean, because we never did look at banking in that manner, because that's what it is, isn't it? That we didn't look at it like that before, whereby there can be a structured approach to actually do what you wanted to do beyond just taking your money, putting it in the bank, getting it out when you need it to. But you're saying that here I am, and my personal financial planning, it needs to be something that you take seriously. And that when we talk about the now, we're not saying that it is your turn. We are saying that as of present is the opportunity that you have to do something about it. And you must take the bull by the horns now if you want to then be able to enjoy it later, right? So when we look at how that is structured, when you talk about your personal planning, you can have what you want to do in your head, but then who's to make sure that that which you have in your head translates to what makes sense on the outside?
And thanks, Ndu. We talked about our relationship managers. They're the cornerstone of every conversation that you'd have. Because our, as Paul said, our relationship managers have been trained. We give them the training from INSEAD that gives them the opportunity to understand the wealth needs of the clients. We give them training from the Chartered Institute of Securities and Investment that helps hone them. But the RM is not alone. They got a support structure around them. Every relationship manager that you will speak to, that understands your needs, that understands your goal, that listens to the aspirations that you have as an individual, is supported by an investment advisor. They have got a treasury specialist who understands what happens in the capital market. They got an insurance specialist that is supporting them. Then they also have a mortgage specialist, because sometimes part of your goal would be, how do I get a home? And when I have that home, how will you be able to move it to the next? They have, but above all, as we talked about being a global organization that is present in Asia, Middle East, and Africa, we got our chief investment office that will be able to look at what happens globally, and that information is distilled, provided every day. And when you are having that conversation with the URM, when you're talking about your goals and your future, that all comes together, and the solutions that then you get sits on the various aspects of goals that you're looking to meet, and that's the person. So for us, the relationship managers that we have are very critical for every conversation our affluent clients are looking to have. That's the person that will help you.
When you talk about your relationship managers, because I've had the experience, you get in and it's someone who will sit and listen to what Aseto is saying. You know, it is my story that they are picking up. It is my aspirations that they want to work with me throughout. Therefore, which comes again to a personalized financial planning that fits my needs as me. So by the end, I walk in and I tell my story and I get a planning in place. It is my story. How critical is it to have a personalized financial planning around my wealth?
Yeah, so remember, I'll give you an analogy of a doctor. And if you walk into a doctor's office and the doctor tells you, okay, you've come in, Dennis, I'll give you the same medicine I gave the guy you met on your way in, the last patient in.
Yeah.
How would you take that? Would you actually take that medicine?
It is not by medication.
It isn't yours, right? So what we are doing is actually financial health and actual medical health are kind of a similar thing in terms of how we relate to them. And we need to elevate the conversation around financial health. It needs to be that specialized. It needs to be that personalized. And the way we have done is, firstly, is getting the RM to be able to understand you. That skill set is very important. Secondly, then, is to ensure that in the array of solutions that are available to then cocktail something that is specific to you, Dennis, or to a specific client, then that array is big enough. We do not, as Standard Chartered, we say we have an open architecture in terms of the solutions we offer. Standard Chartered does not manufacture its own financial products. We partner. We bring in the BlackRock, the Franklin Templeton, Ernestine Bastine, the Amundi, Sanlam, all these financial prudential from an insurance perspective as well. We bring them in because they are expert in designing and bringing product. We demand the best. We assess them to make sure they are the best. Then once that array is there, huge array, then we say, okay, fine. We hear you, Dennis. This is what you are planning is children education, and you want the children to go to UK. This is the time frame we have. Then in your financial cocktail, we will bring this part in, this part in, and this part in. That is now for you. Then will come in and we say, what's your plan? Hi, she's talking about legacy and how she'll transfer her wealth to the next generation. Then we say, okay, fine. What we give then is for school, is to ensure that he has a plan for his children. You as his legacy. And then we'll pick what are the legacy solutions. And here we bring in tax partners, we bring in lawyers in. Yeah, we are partnering with lawyers, and I know in the earlier editions we've come with lawyers here to help you then structure that. So every solution is curated to meet the client need. No medicine is the same for every client.
Everyone.
Yeah.
Okay. So when it comes to this wealth that you want to then be able to build and manage later on, the risk then becomes an issue for a lot of people because they say, well, I've heard horror stories of people who've put their money, their lifelong, could be savings or profits from investment that they've made in something that goes belly up. And so now when we talk about managing wealth for tomorrow, what risk management mechanisms are in place or that do you embrace to ensure that folks who are getting into it can be comfortable that it will actually serve them?
Yes. Thanks. When it comes to our advisory framework, the very first conversation that you have with your RM to be able to understand you is it brings out you knowing not only what you want to achieve, but as a person, what is your time horizon from an investment perspective? What is your risk appetite? And we got a tool that we call client investment profiling. What this does for you, it's a series of questions that helps you as an individual understand what exactly is my risk appetite. Based on my knowledge, what are the products that I can be able to take? Because one thing, and as you said, that you can be able to some people can be able to do. I see a return of, let's say, 20-30%. You go for it. But can you be able to take the risk? Is it within your time horizon? And when that's something that we tell clients, that when you understand yourself, you understand your risk appetite, you understand your time horizon, then the product that you take fits into that. That's really important. But also what we also do is that making money in itself is not the end piece, because if you want the wealth that you have accumulated over a given period of time to move to the next generation, you will have to protect it. And this is where the insurance become really pivotal. In this country, and we know, you probably are a sickness away from being poor. What are some of our clients doing? And part of the solution, you got your investment that you put in that needs to meet your goal. Let's say you want to send your kids to school in 10, 15 years. You put your investments, either you bought bonds or funds that will be able to help you meet that goal. But what also we do is you wrap insurance around it. And some people do it in a really good way, in the sense that I take a protection out of it, insurance product out of it. I use the returns that come, let's say, from a bond to pay for that premium. In that way, you get your you got your investment running. You protected it, because life happens, and you need to make sure that the people you love are taken care of if you're not there. So it's really critical as you make as client make the investment, is to understand yourself, understand the risk that you can be able to take, but also protection from an insurance perspective is very, very critical to protect the wealth that you're working so hard to generate.
We're talking about now is the time for you to create wealth. It is now and not later. That we often do say that, don't we? That we can say, okay, just give me a little bit more time, Paul. Just let me get that promotion. I'm angling for it. You know, I've had the conversation. They've said that my name is there. And when that happens, you know, my salary will increase by another, 50,000 shillings, whatever the case may be. And then, Paul, we can have this conversation. So can you wait for me to do that then? Just give me 6 months or so. Because with what I have now, I can't really make any extra to kind of start to put away. That's a real conversation that folks are having. So can we wait?
What we've found from the studies and the research and talking to clients is these life goals are non-negotiable. So please, I'm not negotiating with you, do. It's the goals. Your goals are non-negotiable. Your children education is non-negotiable. And really you can say, okay, son or daughter, I know you're due for school, for college. Just wait for 1 more year as I'm trying to figure this thing out. Time for school, kid is in school. Health emergencies, I mean, like, you're not negotiating, right? And you know that, right? Retirement. It's coming.
Whether you like it or not.
You would negotiate, right? And really the reason why it is now is because we know that you're going to have to make some decisions now so that then you can achieve these goals later. If you wait longer, it becomes tougher and you require more resources to be able to then still achieve those life goals. For example, if you did not plan for a child college education, and now they come with a letter, invitation to college, what do you want to do? You rush back to us. You want a loan, right? Fine, we'll gladly give you the loan, right? But you see what you've done yourself now is that your retirement goal now is at risk. Because instead of saving for retirement, now you're paying a loan. Then you retire. Then what happens?
There's no income.
There's no income, and we can't give you a loan anymore.
Oh, no.
So retirement indignity is threatened. So it's important to realize that we need to do it now, so that then, is a stitch in time saves 9, right?
Right.
Precisely, yeah.
You see, there is the aspect of we work so very hard. Aseto, his apartment building in Kilimani, doing very well. I have a house in Migori County. I'm chilling. But all I'm looking forward is the collection of rent that I have to be in my account. It's growing fat, and we are doing very well. But then again, there are the misfortunes that happen. Aseto, okay, I'm not planning to die, but we can't negotiate because it's coming, right? It's coming. And it's an event where you never planned around your estate and the risks that are involved in there. So in terms of Standard Chartered coming forth and making sure that I manage this and even planning together for the transfer of the same for the time that I'm not in. This is an area that people need to sit down and discuss about. And me, the estate manager, the estate owner, needs to have that conversation. Would you reckon?
Yeah. Yes, and as we said, this is one of the critical conversations that we need to have, and as Standard Chartered Bank, we are beginning to have with our clients in this moment in time. Because one of the things that research tells us that 85% of all the wealth that you make get lost by family wrangles after you are not there. And it's very important as the estate planner to put processes in place so that that doesn't happen. And we all know, we are in this country, we know of cases where that has happened. And that is why, as Standard Chartered Bank, we are bringing in professionals to have not only have conversation with yourself as the estate planner, but it's also critical to have the people you're planning for. Because you might have the best of intentions. You put your wealth together to transfer it to the next generation. But are they ready? Are they ready for it? Are they ready to take care of the wealth? Because most of the wealth that gets transferred, 90% does not reach the third generation. How do we break that curse?
Indeed.
It's important that the people that are also receiving get the kind of education to understand on how to manage this wealth so that they can build it so that it goes the third, fourth, fifth generation. That's how wealth is created. And it's an important conversation. And for us in StanChart, we're bringing in professionals that helps you understand what you need to do. But also we are educating not only our clients, but also their dependents to really understand what is important, how when you receive it, what you need to do so that you preserve it to the next generation. It's a critical conversation for our country, for our people. The independent generation that made the wealth and created what all of us are enjoying are transitioning. It's important that those who are transitioning put in the structures, but those who are also receiving get the knowledge and understanding on how they can further build on this so that they can also transfer it into the next generation.
So I want to add something on the knowledge. So there is the wealth transfer, then there's knowledge transfer. And what are we doing now as a bank, as Standard Chartered Bank? So through our Chief Investment Office, who runs the advisory structure for us, we have a daily podcast. Daily. It's called SC Money Insight. Wow. You can get it on your favorite podcast. And what we do is every day we have a 3-minute something about what's going on. And every week we have what we call the investor tips. It's about 6 minutes to about 9 minutes. Every week. I also, Paul, I write letters to my clients. So on every Monday you'll see investor tip from me. And essentially what we are doing is we are trying to disseminate as much information and this knowledge so that we build the muscle into the general consumer, so that as they are planning for this wealth, as they are thinking about the transfer, then that knowledge transfer also is happening. So as a bank, we are resourceful. We do research both into the markets, both into consumer habits and trends. Of course, with our partners in the fund space, in the insurance space, in the legal fraternity, in the tax profession. I mean, we are a connector. We are a connector organization. We bring all this, we have all this knowledge, like the bees, and then we disseminate it to our clients. So we really look forward for our clients to register to our podcasts. With their favorite podcast, whatever they use. It's called SC Money Insights, so that they can be able to build this financial knowledge muscle. Yeah, thank you.
So, I mean, I think that's fantastically interesting, because then you see the merging of worlds whereby information is being shared in a trend that's happening around the world at the moment, again, with podcasts. Now, even as we look at some of these things, when we look at economic, I want to go through to now when you will see that there will be global falls, or there will be things that will happen that your money could then be affected. However, Paul, Ouma, how will I know that I have attained wealth? How will I know that I have gotten to that place? are we looking at the markers that will then say if your children are at school, for example, whether it's from primary through to the university level, and you've been able to pay for that consistently and on time, if you have significant investments whereby you have, put some money in markets and you can see that they're making money here and there, and that you have a little bit to spare, that you're sure that when you retire, you're sure you can see the money that you have months that you can survive on. Would you say that you have attained wealth then?
Yeah. So remember, at the end of the day, we start by saying what is the goals.
Yes.
So it is very easy to actually, even as a client, to say, have I actually achieved my goals? Because we set it out much earlier. That conversation with the RM,
yes,
it is very clear. We go through that detail so that we make sure, is this a real goal? Yeah, you sure? Yes. So then if you're able to put your kids to school, able to have a health emergency fund, and then you're able to retire in time and in dignity. You don't have to work way past 60, right? And once you've achieved that, you can transfer something to the next generation, including knowledge to the next generation.
Yeah.
Then you could put a scorecard and say, it's working. Must you score in every single of them at every time? I don't think so, right? But if you score in most of them, then you could put a tick and say, this thing is happening. So that's number one. For us as an organization, yes, we also have a scorecard, okay, to say how much of what we call net new money or asset under management we are actually building, meaning that's the consolidated wealth that we're actually managing for clients. In 2019, we were managing just about 19 billion shillings. 2019. Okay? Today, when I checked last, we are managing over 200 billion shillings. Actually, 235 to be precise.
For Kenya?
For Kenya. We're talking Kenya clients, individuals and businesses, small businesses, small enterprise, SMEs. Not corporates. Individuals and entrepreneurs. Over 200 billion. That is a tick. That's a tick.
I'll say.
Then we can say for sure. And we are seeing growth. Both clients who are investing in, I would say, basics investment solutions like SE Shilingi, which is the money market, getting to the bond market, and clients who are going into the mutual funds and more sophisticated solutions internationally. So we are seeing clients are actually progressively building their diversification of wealth. We are also keen, very, very keen to see that actually home ownership is also taking a center stage because we all live somewhere.
Yeah.
Why can't we own it? So we are facilitating that through our mortgage solutions, and the uptake of the mortgage solution is also a tick to us. We see, okay, so that's another person who's gotten a house. Celebrate. That's good. Continuously. So we also having a scorecard for ourselves. We have scorecard for our RMs as well. So we are able to measure. And overall, in the overall country statistics, we are following keenly some of the statistics in terms of financial inclusion. But I also like to say, what I like to say is financial health. And I know there is a research that's done around financial inclusion, which inclusion has improved very well, it's above 70%. But wellness hasn't. And that's an area that the score hasn't been a good tick. We really have to work hard and make sure the wellness is there. And of course, from an insurance perspective, the market penetration of insurance products, and especially life insurance, it can remain sub 2%. So there are areas that we really need to work very hard, both ourselves, for the state, everyone, to come together and make sure we change those statistics. We are taking our stand as Standard Chartered. It's time for wealth, and now is
the time. Now, Orero, you see, from the moment I walk into Standard Chartered hall, there is an RM that hears me out, that I talk to, that picks up my story and understands me, right? And then we get to a point where now these are my portfolios. This is what I'm talking about. And from the time that you're now getting your scorecard, we're celebrating, I have this new home, and a scorecard for you for the RM and for Aseto, everyone is celebrating. But from that, there is something that is very critical: trust and security. And trust and security is an area where each and every single person is concerned about. And perhaps it's an area that we need to talk about in terms of the trust and security that Standard Chartered gives me in making sure that my wealth today is protected, and that even when I'm not there in the future, it is still taken care of.
Yes, and that's really critical, because when it comes to your personal wealth, you got to because when you're having conversation with the RM, you're pouring your heart out, your dreams, and you're talking about what you're looking to do. You got to trust that person, and the first piece is, who is that person, that RM, what's the level of training that they have, and the level of support that the RM does have. But also as an institution that are in this market over 110 years, 170 years, globally, that shows that we've been able to do something right with our clients. There are markets that we are banking the fifth generation of families and be able to grow, help them grow their wealth. But also one thing that is really fundamental to us, which is our competitive advantage, which we did talk about, is the open architect. And let me just talk a little bit more on that. That the solutions that we provide to you that speaks to the goals that you did talk about, we do not manufacture. That means that if this market happens, like what's happening at the moment, and it's not moving towards your goal, we can easily change course to stick to what direction that you are taking. That is really important, that we go out, partner with the best in the market, be it from an investment or an insurance perspective, that what the RM gives you is what meets your goal. And because we can easily change tact, that's really fundamentally important, because if you are in a different way, then you will stick to what we have given you. That's really important. But also, as an institution, when it comes to ethics and the investment decision that we make, that's why when you start your investment journey, that investment profiling that helps you understand who you are is really important, so that the product that you pick speaks to yourself. That is really, really critical, so that you don't get yourself, I bought I needed to pay my fee in 1 year, but I bought a 10-year bond. You could have put it in, let's say, a shilingi fund that gives you value beyond what you get. That's the piece which is really critical. The longevity that we have had, the level of specialists that we provide the RM with, and the training, and also the way our advisory framework is, that we go out and pick partners that will give you value that meets your goal. That's really critical, so that as a client, as you come in, you get what exactly is the advisory framework. That gives you that comfort and the trust that you are getting what exactly you are looking for.
I want to add only one thing.
Yes.
We don't lock in your investment.
Okay.
That is fundamental. And I'm just posing to let it sink. We do not lock in your investment. We don't say you have to invest for 5 years lock in, or 2 years lock in, or 1 year lock in. Because why are you locking in the investor? Why? It should be open. The investor should be, exactly. It is our job to ensure that the investment is available at whatever time we may need it. So our open architecture is beyond just the partner. It's also the time frames. It's open. We stay open. And we also show you, if you've bought a mutual fund, what is the component of that mutual fund? Which particular companies did you buy? Is it NVIDIA? Is it Tesla? Is it Facebook Meta? What did you actually buy? If it's a bond, which bond? What is the time frame?
So you know exactly what is happening within your investment.
Yes.
Precisely. If it's our fees and commissions, we make it public. You see what it is you're being charged. We don't have hidden fees.
Right.
So that ability is our way of ensuring that we build trust with the client, that indeed we are open. You can view us, you can question. We also deliver on the app. We show you your investment, what you purchased, when it is settled. In your portfolio, you can see it anytime. We send you monthly statement, but you can view it anytime. Of course, you don't view it every day, because you may make the wrong decisions. You can buy, sell on the app. Controls. So that openness is to ensure that we are making the client realize that we are here. You can see us anytime.
So, I mean, you talked about the sophistication of, the investments that folks are starting to get into, that you didn't imagine that you would be here with your however X amount of shillings and you could actually make an investment on the open global market, and that you could sit here with a portfolio that would take in, global trends and things like that. So those are for individuals. But what kind of support then is available for folks who are in business? I have my small business of 8 people, 3 people, and we're doing something. What kind of affluent support then is available for business owners?
Yeah. So the first thing is we recognize that business owners, especially SME, drive the economy. So we also need to support them. And also the other thing we also realize, and data is showing us, that entrepreneurs are actually our clients as well. So it makes perfect sense to actually make sure that we serve them. So the solutions that are available for individuals are also available for business. Okay. So that I can tell you for a fact, business can be able to look at the bonds market, both locally and internationally. We can be able to offer them the mutual funds, the whole range of over 200 different mutual funds globally. The insurance solutions, we have a particular one that is called Live Life. That's working very well for business owners. It's a whole of life product. That's a terminology, but it really takes care of the person in their eternity for their whole life. Okay. Very good tool for wealth transfer for business owners, entrepreneurs, and then of course the everyday banking. We're able to support them even when they want to actually finance the property on which then their business is operating, finance working capital, because business owners, part of their growing of wealth is helping them to facilitate their growth of wealth, and we also take businesses across borders. We are a connector bank. We bank businesses in Asia, in Middle East here. We bank business across Africa. So we find companies that are in Kenya that want to externalize themselves, and we connect them. We also connect our business clients with our corporate clients as suppliers and distributors. So this whole journey of creating wealth is not just about the investment solutions, but also the everyday banking solutions that actually support business owners to become creators of wealth.
You see, at any given time, I'm an SME, I have my money here, I'm doing well, I get it. I start doing my research on Google, and they say doctors advise you to never prescribe yourself on Google because you'll end up getting even more sicker, right? But here is a situation where I want to make a financial decision, but I don't know where to go. I don't know what to make because it is overwhelming in an ilemea. So how do we optimize on proper financial decision when it comes to wealth?
Okay. When it comes to wealth and making the decision, this is because when it comes to your money and you want to do the investment, there's a lot of emotions involved in that, and we all do have that, and that's why even for myself, when I want to make an investment, I speak to my area. Because they see me in a way that I don't see myself, and in that way they help me make that decision. And one of the things that we do, and given our not only the advisory framework, the information that comes out of the Chief Investment Office helps guide the decisions that I make and the investments that I do put. So it's very critical to do that. And then one of the things that we look at from the advisory framework perspective is that when you speak to URM and you put your goals and things change, you have that conversation because life changes. Who you are now is not who you were 5 years ago. Goals also do change. Things happen and you change your goal. You make sure that you keep on having that conversation. And that helps you be able to put everything in perspective so that the decisions that you make going forward is what actually meets the goals that you are looking at. So that's really critical. You don't really need to advise it. So from a decision in perspective, you have a conversation. Then the execution piece is we have everything on the app that you can easily be able to execute. But it's really critical to have that conversation with your RM so that you bounce off the ideas that you have, so that the decision that you make really speaks to the goals that you have.
So, I mean, even as we do, then the question for a lot of people, and I think it's rung through a thread, is that, okay, so at the place where I am now, whereby you think that, you know, if you've made a mistake here or there and maybe your wealth or your approaches have not been the best, where can you actually start from? From where you are? Do I need to make sure that, okay, maybe I get myself in order before then I come and say, okay, Standard Chartered, what can I do? How do you start the process?
Yeah, I think that you start now and where you are, and the way to start is to if you have an RM, call your RM, talk to your RM. If you don't, you can write to us at wealth.kenya@sc.com, wealth.kenya@sc.com, and we will pick that. We will help you if you're new to the bank. We'll onboard you. We'll help you with somebody to help you onboard. Of course, we have a digital way of onboarding, but we'll also help you, advise you through so that then you end up in the right space. But then, from an investment perspective, the best way is to tell the story. Share the story with the area. Just speak free flow, free format without any. No need to bring any papers. Just speak, because it's when you do that. Because the life goals actually comes out because it's part of you. It's part of you. They just come out. You say, actually, I'm just thinking, my daughter is 3 years, and some of the goals I have, or some of the things I'm thinking is if I can be able to educate them, in the UK and all that, and 3 years, 3 years to 15, that's true, 12 years
They're already
out
doing the
there.
calculation.
And then, of course, they can see you and say, what's his job? Okay, so, and they can say, okay, this guy is likely to retire in the next 10 years. So those things are there, and they will prompt you with the questions like, what are you thinking about your retirement? And then you say, you know what? Actually, I want to retire in a small, nice island in the Maldives.
Okay.
So the idea is, so you build that story, then it gets structured. And that's why we have the support team, the investment advisor, insurance specialist, mortgage specialist, because those conversations can lead in a different direction, and the RM needs to have somebody to back their advisory or what they are discussing with you, so that it's backed with actual facts. So they'll say, okay, I've met a client, they are looking to own a home in this area. Mortgage specialists come here. Let's structure this thing together. So then they come to you and say, this is what we have. What do you think about it? So start now, start where you are. Don't be too scripted. Just talk. Just talk. That's all.
And that's where you start, essentially. Look, we are also looking at different areas whereby, and I just wanted to go back to one issue of then release of this wealth onto the next generation, and then just passing over your assets. When it's too young or too old for you to start to because there are children involved here, and usually the passing on of wealth is to your children. When do you start to let them know about practices that they can get involved in? Because we're dealing with the primary practitioner here, and that's you, but you need to bring somebody else into the fold at some point and give them the information. When and how do you start to do that?
So what we've seen and what we do and what we advise some of our clients when we're having some of this session, just bring them along. I've had parents bringing us 10-12 years because they need to understand how they relate with money, how they relate with wealth. And that's where the passing of the knowledge starts coming in. So that as they grow older, the decisions that they make are a little bit more structured. But also as you make these decisions, because let's say at this moment your kids are 10, and where you are, you start the process, you put the wheels and then the trust in place. 5-10 years, things change, then you review that. It's always good to bring them along. And because in some of the cases that we have seen in most of the market, and you get life happens, but we only knew about the house where you are now. There are 3-5 more things that you had that you did not put in place. So it's always advisable to bring everybody in place so that they get the knowledge and understanding, and that helps so that when you are able, you reach that time that you're making the transfer, it becomes easier, and it also reduces some of the wrangles that happens. That really takes out, as they say earlier, 85% of the wealth that you made evaporates because of those wrangles. When you start early and you make everybody have that understanding, you reduce some of those frictions that do eventually take place.
I can
I mean,
add,
yes.
as they can choose what they want to wear.
There you go.
They're already making choices.
Dad, I
Yes.
want the blue shirt and not the
Yep.
green
Yes.
one.
Yeah.
That's the time you start having these conversations with
Yep.
them. I love to hear it. And it's now. Essentially, It's now. That's been our word for the hour for sure. And to be able to have these conversations, I think it's absolutely important. Paul Njoki, head of Affluent Banking and Wealth Management Products Kenya and East Africa, and Ouma Orero, who is head of Wealth Products Kenya and East Africa from Standard Chartered. Thank you for being here this morning.
Thanks for
Definitely
having
worth
us.
having
Thank you
a
for having
conversation.
us.
Asante.
Thank you.
This is the Situation Room, the only way to start your day.